What's going on, everyone? Welcome back to Couples Trading Lab. I'm Ray.
And this is Body. This is the daily price action show. We'll be going over SPY and QQQ. We got some very interesting charts for you. And I have something that I think not a lot of traders are paying attention to that is very, very crucial that you are aware of heading into this week because it sets up the ground for what's about to happen within the upcoming weeks.
Let's start with SPY. After closing yesterday as a strong bullish halo candle near fresh all-time highs, bulls walked directly into a trap. The previous session suggested buyers remain firmly in control. Traders who were expecting another breakout day saw a strong close, fresh high, and what appeared to be continued momentum to the upside. But instead, sellers completely reversed the sentiment overnight. SPY gapped lower before the opening bell and immediately began selling off in what is known as a gap and go. A gap and go happens in extreme trend reversal where the market closes strong but gaps down in the opposite direction overnight and continues going down into open. Rather than seeing buyers step in to recover, sellers remain firmly in control and continue pushing the market lower into close. This type of price action often creates a bull trap. Traders who chased the previous day's trend expecting higher prices were immediately trapped as the market reversed against them. As those positions begin exiting, the selling pressure can often accelerate. What makes this setup more important is where it occurred. The bull trap developed near fresh all-time highs, strengthening the bearish divergence shown on this daily time frame. While price pushed to fresh highs, relative strength index, the RSI, printed lower highs beneath the surface. SPY also remains significantly extended above its rising 20 EMA. The further price gets away from the 20 EMA, the greater the probability that the market eventually works its way back towards equilibrium through either a pullback or a period of consolidation. Today's sell-off also resulted in sellers breaking multiple day lows, something buyers have largely prevented throughout this entire advance from the April lows. That represents one of the first meaningful changes in character we've seen in months. The next thing I'll be watching tomorrow morning is whether sellers can generate additional follow-through below today's low of 754.50. If they can, I think the first area of interest sits near 748 to 749. Should sellers break below that level, I think the market could begin working its way down toward the rising 20 EMA near 743, which remains most important equilibrium level on the chart. This is where the bull momentum traders are likely to show up. For now, the focus is no longer chasing upside momentum. The focus is on whether today's bull trap near all-time highs marks the beginning of a larger move back down toward equilibrium. As I mentioned in yesterday's video, this is where bull momentum traders have to favor the sidelines.
QQQ remains one of the strongest charts in the market, but multiple warning signs are beginning to emerge beneath the surface. After pushing to another fresh all-time highs near 749, buyers were unable to maintain control and sellers stepped in aggressively, driving QQQ lower into the close. Just like SPY, what stands out the most right now is the bearish divergence developing on the daily time frame. That tells us momentum is no longer keeping pace with price, often one of the first warning signs that a trend may be starting to slow. QQQ also remains significantly extended above its rising 20 EMA. I use this line as a bullish momentum extension gauge to measure how far we are away from the equilibrium reset. This makes the bearish divergence even more dangerous. Since the April lows, buyers have consistently defended every pullback, but markets rarely ever remain that stretched away from equilibrium forever. Tomorrow and the day after are crucial to see whether sellers can generate additional follow-through below today's low at 741.41. If they can break that low, I think QQQ starts working its way back down towards prior support near 736. Should sellers continue gaining momentum below that level, the next major area of interest becomes the rising 20 EMA near 717, which remains the most important equilibrium level on the chart. These two levels ahead are where patient, bullish momentum traders who are on the sidelines can look for opportunities, not chasing the momentum up here. For now, let's take it one day at a time and see if we are going to get follow through on this downside. Only way bulls can invalidate today's bearish setup is if they print a massive bullish engulfing candle breaking above today's high of day at 748.65. Given how overextended we are, it may be unlikely we see that. Price could favor downside here to reset the lopsided risk to reward dynamics.
Do you think SPY continues grinding higher from here? Or are you waiting for a larger pullback before becoming aggressive?
Leave a comment down below. We really enjoy reading your comments. And not only us, but others also enjoy reading your comments to feel what sentiment is like in the market, what everyone is thinking, and most importantly, it helps push us towards other viewers as well, recommends us to other viewers, and that greatly helps our channel. Thank you so much for watching this video. We'll see you in tomorrow's daily price action show.